Good morning, traders. Today is Monday, the 29th of March, 2021. My name is Neville Hornsey, market analyst with YouTrading, and I'm joined today again by
Joel Frank, also market analyst at YouTrading.
How you doing?
How you getting on, Nev?
Yeah.
We're both up at the same time.
Yeah, exactly. Jinx. All good.
Jinx, literally.
Did you have a good weekend?
Yeah, it was all right, to be fair.
Cool.
I mean, the weather's getting better, like clock change.
Yeah, that's it. That's when you know
the thing.
it's here. Clocks have changed, so we've all lost an hour of sleep, but it's sunnier outside, so it's all good.
Yeah, man, it's so worth it for that extra hour in the evening. Oh, so nice.
So did you notice anything over the weekend, like in the markets?
In the markets, there wasn't a massive amount of news, really. I mean, we were just talking about probably the most exciting thing is it looks like they're close to getting the Ever Given free.
Mm-hmm.
So this blockage in the Suez Canal could potentially end by the end of today or later in the week. And, potentially that could be weighing on crude prices a little bit. So,
yeah. No, definitely. I've just pulled up a chart. So we've got the evergreen there.
Ever Given.
Well, it's green on the it's a green mark on the marinetraffic.com. So yeah, Ever Given 43 minutes ago, position received, still there in the Suez Canal. And when you backtrack back out into the actual sort of seas and stuff, you can just see a big sea of traffic. Just a mad traffic jam that way, and on the other side, on the other port side. But that's crazy, isn't it? And then oil prices slightly down for the day, but generally pretty much where they were last time we spoke. So
yeah, it's not too bad, really, is it?
No. So it's a thing that's happening, and it's soon to be rectified by the sounds of it. So
yeah. By the way, just whilst we were on the chart of crude oil, man, it's been crazy recently. Crude oil, it was swinging 5-6% practically every day last week.
Yeah, this $60 level is a serious bone of contention between the bulls and the bears, isn't it? They're having a real battle about it. It kind
Definitely
of looks like it's still a corrective pattern. So you've got the 200 EMA down at sort of $50. So that's where it'll be, rising through when, if price does come back down. And I've got this little zone at 52 to 53, which is...
Yeah, I like that zone.
Yeah, so... But I guess it's the dollar, the actual dollar itself, and coronavirus. So that's the battle, isn't it? Yeah.
Definitely.
Everybody thinks the reflation trade's still happening, but is it? Is it? Yeah. If
that is the question.
If everything's going to lockdown, and in Europe, and America seems to be picking up on their cases as well. So that was worrying me a bit at the start of last week. Their 7-day moving average of new infections has been rising, but the thing is, I think America is going to be a bit different to Europe, because Europe, the cases are rising, but a lot of people in Europe aren't vaccinated still. A lot of the vulnerable people are going to unfortunately die in this wave. Whereas in the US, fingers crossed, that's what I'm really hoping. Yeah, cases might rise, but because the US has done a good job with its vaccination program, hopefully the hospitals won't get full again. Do you know what I mean? Because they've already vaccinated the people that would have gone to hospital and potentially died. That might be a bit over optimistic, but I think that's the game plan with all of the governments, isn't it? To get the vulnerable safer, but it's just to stop the overwhelming of the health services themselves. No one's really, you can't stop it. You just need to try and suppress it. And I think Europe's probably in a worse place for that. And the crude price coming down was largely to do with the rising coronaviruses and the increasing dollar. And the dollar doesn't seem to be coming down. So
no. Well, I think the increase in dollars, a big part of that is because of what you're saying as well, the situation in Europe. Yeah.
So everyone's moving towards the dollar, a bit like they did, I guess, the first time round. This time last year, they moved into dollar, didn't they?
Yeah, a little bit. That was this time last year, but although that was more panicked, I think. Whereas I think this is more of a strategic. I think part of this move into the dollar is is what we were just saying about rising coronavirus cases in Europe and a bit of a safe haven bid. But I also think part of it's to do with that play where people are expecting outperformance in the US economy compared to Europe and Japan. Like, you know what I mean?
Yeah.
Because another thing that I think has been driving the dollar has been, if you look at the rate differentials between US government bonds and European government bonds and Japanese government bonds, that's been increasing. And that's at highs for a long time, since pre-pandemic sort of levels. So that's been helping drive the flows into the dollar as well.
Yeah. No, I guess the dollar is the key. So we just have to keep watching the dollar for all of that.
Yeah.
And I guess gold sort of shows that, the inflation type trade isn't that much of a worry at the moment. And with the rising dollar, gold's getting suppressed. So, but then gold's like a fear sort of trade as well, isn't it? If the markets are fearful, then they go into dollar. And so I don't think the markets are that fearful like they were before.
Have you seen that gold's been in this range though for the last week?
Yeah, and
I've moved.
I read that the gold producers, even though they're net short, they've actually been buying recently. So they're obviously finding some sort of value around the $1,700. So that might put a base in for the price itself. But whether or not they keep buying is to be seen.
That's weird that the gold producers are net buyers now.
Well, no, they're buying more. Like they're not like their position is still short. It's just that they've been like sort of curtailing that short a bit. It's just because I guess they find they could produce now and then like sell it higher, but we'll see. They obviously feel that it might go higher. What else we got?
Fair enough.
The melt up on Friday. I'm a NASDAQ trader, and the last hour, as always, was interesting. It started a little bit earlier. It just seemed to just be non-stop bull move, but we've just pulled back a little bit today, retraced into that move a little bit, but there wasn't anything over the weekend in terms of
not really, not anything that's like massively going to be moving stocks. Like I think the big things for stocks coming up, it's all events this week. Like what have we got? We got NFP, US official jobs report. We got ISM manufacturing. So NFP's on Friday. Oh, this is going to be an interesting one, by the way. I was speaking to my uncle who's been working in markets for like 30 years now. And so this NFP is during all the markets in the US are closed.
Yeah, it's a Good Friday, isn't it? It's nuts.
Even the futures market's closed. So and then obviously FX markets are going to be really, really thin volumes, but they're still doing NFP on Good Friday. So
I'm pretty sure that I've witnessed NFP get brought forward or delayed by a week.
They have in the past. Yeah.
So like
they have.
Did your man give you any reason why they're doing Friday?
No, he thought it was a bit stupid that they're still doing Friday, but because like I say, he's been working in markets for so long. He said that back in 1996, they did the same thing. And there was 3 limit downs in treasury markets.
Okay.
So, I don't know. We don't know what's going to happen. It could be volatile is basically the takeaway.
Because we've got like a short week this week and then we've got a short week next week, haven't we? So I guess the key would be to get hedged by Thursday or just out. No one wants to get caught in a limit down over the weekend and you can't do anything about it until Tuesday. So
exactly. 100%. Don't leave any positions open unless you know what you're doing. Because also
unless you like
slippage as well. Like you could have massive slippage on your loss. But what we were talking about the weekend. What else we got? So the 2 key pieces of US data at the end of the week. But like you say, it's going to be positioning before that on the Thursday. We've also got President Biden speaking on Wednesday about the infrastructure package. Pretty much, that's going to be a big event. And then like Monday, Tuesday, Wednesday, it's all about quarter end rebalancing as well. So it's going to be busy.
And with all the rebalancing plus, like you say, everyone's talking up the new 3 trillion. I've heard some ridiculous numbers of what could be coming in terms of infrastructure and more sort of support for the economy, fiscal support. After all of last year, where the central banks were saying, the governments need to do more, like they've kind of run out, like the central banks themselves had run out of, not ideas, but run out of bullets as such. There's not a lot else they could do. And now you've got like Biden's administration following on from Trump's administration, it was just like throwing trillions of dollars at the markets. And I think some of the bullish melt up last week, it just felt, the whole week just felt like it's been pushed down. And then once that sort of feeling had gone, like once the stimmy checks had like all gone into the bank accounts, maybe that's, I think the true intention of the market is just to rise. And Friday was anything to go by, say it was positioning, like end of month positioning is the last full trading week. Hopefully we get some more days like that where we actually get out of this correction sort of phase at the moment that we're in. So.
Yeah. Well, I mean, we're not far off all-time highs. Like S&P 500 is what? It's the all-time high was 990.
Yeah, we're just like
we're only like we're not far. We are really not far. And a lot of that was thanks to last Friday's melt up. But I agree, man. I think definitely for now, the default for the stock market, like if there's no news, for example, like we're going to be going gradually grinding higher. That's like the path of least resistance for the stock market, definitely. Because it's like when there's no news, like you can default to those longer term fundamental things, like the fact that the vaccine rollout, the US economy improving, we're coming out of the pandemic, central banks are still incredibly easy with their monetary policy, despite the fact that we're coming out of the pandemic. So that we get these short-term setbacks, like what we've had with the news out of Europe recently, or whatever other short-term setbacks, like maybe some worries about US-China relations that could have contributed a bit recently to some of the downside. But
I think just the amount of Fed talk and the amount of central bankers talk in the last 10 days of trading, it's such an unknown what they're going to spout, or what forward guidance they're going to slip in at those points, that I think the market, plus like you say, the US China thing, that seems to, I don't know if it's ever truly what we get told in the media, because they come out with rhetoric which is kind of quite harsh towards China, saying no, we don't agree with this, but then everybody knows we need to deal with them. Like it's just like there's nothing. Everyone just, I don't understand why they can't just say, we want to be best buddies and let's just trade, because that's what everybody wants to do, and that's what they do anyway. So
I don't know. They want to, because they don't want to. They want to keep that moral high ground kind of thing, where they don't want to. If a country's doing slavery, like in Xinjiang, we think that that's what they're doing to the poor Uyghurs in Xinjiang. They're like, we don't want to let them off the hook for that. But then at the same time, there's
Taiwan and stuff like that. And like, I don't know about you, but I was doing some research into the sort of special drawing rights in the IMF, and how China is like really pushing for, the IMF to be more centralized, like the central bank of all central banks type of thing. And America under Trump's administration was like, no, we don't want anything to do with that. Whereas Biden's,
we have the Fed. That's what the Fed.
But like Biden's sort of softened towards like the IMF and those sort of special drawing rights. It's towards NATO, all those sort of things that were decoupling. I think Biden's trying to bring them all back. So
no, it's interesting, because I think with Biden, it's been very much what we expected, to be honest. Like the rhetoric on China has, and Russia's got tougher. The rhetoric on Russia, the rhetoric on China has stayed tough, because Trump definitely persuaded the Democrats as well about his trade war and everything. That was one of the things which he had pretty good bipartisan support for, the whole China thing. So they've stayed the course with Trump's policy. But then, like you say, towards Europe and towards the traditional allies, they're a lot softer, which is, I mean, that's good. Like, that's unequivocally good. We want to have better trade relations with the US. Like, man, it'd be great if we could get a trade deal with the US. I don't think that's going to happen for a while, but
no, but I think like our government's definitely pushing forwards. And yeah, I guess when all the deals are done, everything would be great. But yeah, we'll see. Politics.
We'll see. Politics, exactly.
So dollars bullish, crudes mixed, S&P's kind of high, gold's coming down. The only other thing I was looking at was copper. That just seems to be in like a range. So I guess commodities are sort of suffering a little bit to the higher dollar. But
yeah, that's a problem for them. It really. But as long as the Chinese situation stays good, I think copper generally, because it's China that's the big consumer of copper, isn't it? Yeah, they consume 50%.
Yeah.
As long as China stays decent, which it should, then I think copper should be all right in the long run.
In the long run. All right, cool. Well, yeah, I guess with this short week and bank holiday Monday next week, maybe we'll catch up on Tuesday or something next week.
Yeah, that'd be good.
All right, great. All right, have a great weekend. Enjoy,
mate. You as well.
All right, take care.
Have a good one.
Bye.